Good evening, welcome to the presentation Single Touch Payroll and Taxation Workshop. This is a follow-on presentation from How to Save $500 with Your Accountant. It's put together between our class accountants and Kallangur Business Association. So thank you for coming along. Welcome to the Business Association information session, Single Touch Payroll. Are you ready? The second half of this training will look at transition for small business. This session follows up on a point made in my last presentation on how you could save $500 with your accountant. Of course, there's a little disclaimer, which you can read there. This document contains general advice only, is prepared without taking into account your particular objectives, financial circumstances or needs. The information provided is not a substitute for legal, tax or financial product advice. Before making any decision based on this information, you should speak with a licensed financial advisor who should assess its relevance to your individual circumstances. Whilst our class accountants and Kallangur Business Association believes the information is accurate, no warranty is given as to its accuracy, and persons who rely on this information do so at their own risk. The information provided in this presentation is not considered financial product advice for the purpose of the Corporation Act 2001. So what we're going to talk about is we're going to talk about single touch payroll. We're going to talk about prior financial year processes and the new financial year processes. We'll talk about some software. We're going to have a talk about the tax office again, to do with compliance penalties and how they see single touch payroll enhancing business. We'll talk about strategies. We'll do some stuff on closing, and then we'll talk about other events coming up. So my name's Michael Thomas. I'm a fellow of the Institute of Public Accountants. I've got a graduate certificate in professional accounting, over 29 years with the federal government, working in finance, procurement, logistics management, supply chain management. I'm a small business owner, and I've also dabbled in property investments. What can we expect tonight? Well, tonight we're going to discuss things that we know, discuss things that we don't know, and hopefully we can help bridge the gap between those two knowledge points. So first of all, I want to talk about the difference between an employee and a contractor. So there's a basic test that the ATO has about whether you're an employee or a contractor, because single touch payroll doesn't affect contractors, it only affects employees. So an employee works in your business and is part of your business. A contractor is running their own business. So they're a separate entity, even though they might work within your line of work, for example. So there are 6 factors to determine whether a worker is an employee or a contractor, and these come directly out of the ATO guidelines. So does the worker have an ability to work on their own or delegate work? A contractor normally does. They can delegate work to other people. The basis of payment. Well, the basis of payment might be based on, for an employee, the number of units they produce, the number of hours they work, or maybe even a commission basis. A contractor, by contrast, will be paid for the end result. So it doesn't matter how long it takes to get there, they will be paid for the end result. And generally a contractor will also offer you a quotation with the scope of the work, and then based on that is what you'll pay the bill. An employee could be provided with the tools or the assets, or they could be providing them themselves and being remunerated for it. So for example, an employee might be a plumber, so they've got their own plumbing tools and tape measures and whatever else, but they might get paid a payment or a tool allowance to maintain their tools. So that's the definition of an employee, whereas a contractor provides their own tools. So they might have all of the things that your employee has, but they're responsible for providing them, and if they break down, responsible for replacing them. Commercial risks. The risk with an employee lies with their employer. The risk with a contractor lies with the contractor. So if something goes wrong and the employee's at fault, then then the employer normally wears the responsibility for managing that. Whereas with a contractor, they would have things like public liability insurance, public indemnity to protect themselves from errors and mistakes that are going wrong. Control over the work. So again, this is to do with the manner in which things are done. So they're told, an employee is told what to do, how to do it, and often supplied with the tools, whereas contractor is told, this is the outcome we want, so I'm going to pay you based on the outcome. So it doesn't matter whether it's a straight line to get to that point or a squiggly line, all we're paying for is the delivery of the product at the end. And independence. Again, an employee is told what to do, where to go, what time to be there, what time to finish, what time they're having lunch. A contractor makes all of those independent decisions regardless. So in terms of Single Touch Payroll, Single Touch Payroll at the moment is already rolled out to people with 20 or more employers. So people like BHP and basically anyone with 20 employees, they could be 20 casual employees or a combination of casual permanent employees or permanent employees. Anyone with 20 is already dealing with Single Touch Payroll. From the 1st of July 2019, if you had less than 19 employees as at the 1st of April 2018, then you were deemed to be a small business and fall into the second category of dealing with Single Touch Payroll from the 1st of July. Over the last 12 months since they've rolled it out, the tax office has come to realise there's two other groups. They thought it was just going to be clear, 19 and less and 20. And that was the two groups. There's now two other groups that are creeping in. People with micro business, which is the likes myself, for example, where we have 3 partners / employees. We fall into the micro business category because we're less than 4 employees or less. But a lot of single operators, your tradie carpenter out there, they might have 1 employee. So a lot of trades have 1 or less, or maybe 2 employees. Would you guys? No, you guys would have. Yeah. So there are other businesses out there that just have 1 to 4. Then there's the new-ish category called what they call closely related entities. So closely related entities are businesses that employ family members, employ themselves, shareholders, or beneficiaries in the case of a trust. Because what a company does is a company pays their employees, they have wages, they have salary, they pay their employees. If you're a company director, then what you would do is not pay yourself a wage or salary necessarily, you would pay what we call loan to associate. So at the end of the year, the accountant then does an adjustment to work out whether you want to pay yourself all of that money or put some of it back. And with your sole traders or partnerships, your unincorporated entities, they normally take drawings. So you can't employ yourself necessarily if you're a sole trader or a partner. So what do we need to know about Single Touch Payroll? Single Touch Payroll, the payroll data from your software will be transferred as the payroll progresses. So under the old system, we used to pay people and then we do a quarterly BAS return and you'd work out what your PAYG was, what the payroll as you go collected was, lodge that, and that would happen every quarter. And then at the end of every year, you would do a financial summary or a payroll summary to tell people how much they'd earned for that year. You would also send that file off to the tax office so that the tax office knew how much was being paid to the employee for salary or normal earnings, overtime, allowances, any deductions they had for taxation, superannuation, etc. So to be compliant, the Single Touch Payroll system must have, when it lodges information, an employee's name and tax file number, what the gross amount paid to each employee was, how much tax was withheld, how much was ordinary time earnings, and also how much were the superannuation guarantee objectives. STP is also a real-time regime. So as you do a payroll and you lodge it with the tax office, it updates their system. So it also allows employees to log on to MyGov on Thursday morning or Friday morning and see how much is their payroll, what's their year-to-date earnings, how much superannuation's been paid, and stuff like that. Who's included in STP? Basically everyone with one employee or more. It's a catch-all system. There are going to be very few businesses over the next sort of 12 to 18 months that won't get caught up in STP. Because even those businesses that are micro businesses that don't have payroll in electronic version and interface with the tax office, they will get picked up through software houses, or perhaps the ATO will even come up with their own software so that they can get that information. Who does STP not currently cover? We've already spoken about closely held payees. That is, family members will be given a 1-year exemption from Single Touch Payroll. So they're not required to do their first submission until after the 1st of July of 2020. So that's directors, that's beneficiaries of family trusts, as well as people like sole traders, where you employ yourself as a sole trader. So directors, shareholders of companies, as I said, beneficiaries of trusts. Who does your payroll presently? Well, at the moment you can have an internal employee. You might even do payroll yourself. You could have it outsourced through your tax accountant. That is that they then log into the system, they do your payroll for you. They can then lodge it, or perhaps they send it back to you for approval to lodge so that you can then go to the bank and make the appropriate payment to the employee's accounts. Or you could get it done through a BAS agent. If you're going to get it done by a bookkeeper is not technically eligible to do payroll unless they're an employee of the business or under the supervision of a BAS agent or tax agent. So if you're going to engage a bookkeeper, just make sure that they're either a BAS agent, tax agent, or under the supervision of one, or when they release the payment, they're releasing it under your authority as the employer, not under their own authority. And that's a requirement under the Tax Practitioner Board regulations. So the end of financial year comes around. So how can we prepare for the end of financial year? Instead of doing payroll summaries or what we call group certificates, they're now going to be known as income statements. There is a bulletin put out by the ATO, which is available on the web, that what they suggest you do is you send this bulletin out with information to employees so that the employee can go through and set up things like their MyGov account, where they can view stuff online. Some people will already have MyGov because they might have interaction with Centrelink or the tax office dealing with family tax benefits. So it's recommended that you don't set up an employee's MyGov account. Let them have some ownership of it, let them be responsible, and they can go and get their own MyGov account set up. And lastly is you no longer need to issue payroll summaries. So if an employee comes to you after the 1st of July 2020, because don't forget if you fall into that category of less than 19, while you start reporting from the 1st of July 19, you don't have to report their payroll summary information to the employee until after the 1st of July 2020. So if the employee comes to you in 2019 and says, can I have my payroll summary, you're still obligated to give it to them because you're talking about the tax year from the 1st of July 2018 to the 30th of June 2019. So we're still under the old regime. But under the new regime, there will be they will get the information from the MyGov because that will automatically go through every time you do payroll and it gets updated. Do you have to provide them with a statement? Basically no, because they can go to MyGov, they can go to the tax office and get an income statement, or if you're kind enough you can provide them with one, but there's no obligation for you to provide them with one.
You still do pay slips to them though, don't you?
As far as I know, you do pay slips.
Yeah, you still do that, obviously? Like their weekly thing?
I think produce it, or whoever it is.
That's a good question, actually. All it says in this bulletin is each time your employer, so this is a bulletin for employees, so what it says is each time your employer pays you, your year-to-date tax and super information will be updated in MyGov. It may take a few days to get MyGov information through. That means information you see on MyGov may not always match what you see on your payslip. So the inference there is a payslip will still be a requirement to be given to them every pay period, but the information that's on the payslip might be different than what's on MyGov. Well, imagine you're running a business and you've got really poor internet. So while you might do their pay every fortnight, every week, you might not update MyGov until, say, the end of the month when you go into town and you find a net browser somewhere and you say, right, I want to do an update. So there's a period where you might not report information to the tax office, but then as soon as you do upload the next one, which might be one pay run or even 3, 4, 5 pay runs, it will do an up-to-date. It will give the tax office an up-to-date. So if there's a reason that you've got no internet and you can't do an update, the system, when it eventually connects with the ATO, will do the update. So according to this, the inference is that yes, you still do payroll slips, you still do pay slips, but you just don't have to do payroll summaries at the end of the year. How did we do it? So we used to prepare the final pay run. Are you bored?
I was telling them to ask questions after.
No. Oh, okay. Sorry. Yeah, ask questions after. We used to do the final pay run, then we do the PAYG summaries, and then we ensure that the end of year data went off to the tax office. Well, under the new process, every week, every fortnight, every month, the information will be sent to the ATO. As we said, it'll be all of those things we talked about: employees, tax file numbers, salary, how much tax was withheld, superannuation guarantee payments. Employees can see through their MyGov account what their pay and superannuation is every pay period, subject to good connectivity for... So what can we do to prepare for the end of financial year? Some of this information came from the last presentation, but it's basically check your staff super, check your pay-as-you-go withholdings, pay-as-you-go instalments and other liabilities. Make sure they're all right. So if you're due to pay money, make sure you try and get that done before the end of the financial year and you go to your accountant. For 18-19, ensure that employees receive their payroll summaries by the 14th of July 2019. Send the payroll information for the year to date to the ATO by the 14th of August 2019. And pay your employee superannuation for the period ended the 30th of June 2019 by July 21, 2019, so as to ensure that it makes it to the superannuation clearinghouse by the 28th of July 2019. From 2019-2020 going forward, so in the last year we used to do payroll summaries, and now from the first pay run of the new financial year, the ATO will be updated with employees' year-to-date salary, wages, pay-as-you-go earnings, superannuation, etc. So software that's available at the moment is the big three: your MyOb, your QuickBooks and your Xero. But it's not only about payroll, that's also about running your business. The tax office has sat down with a lot of providers, and at the moment there's about 20 providers that are just doing $10 payroll packages only. So if you want to Google the ATO and you don't currently have a payroll package and you want to get a small package, but you don't want to go and get any of the bigger ones because you just want to manage payroll electronically, you can go and download some information from the tax office. There's some trials out there, so give them a bit of a whirl, find out what one suits you best, what's cost effective. I don't know what happened to that slide. What issues the ATO currently concentrating on? I guess they're concentrating on the right amount of pay, the right amount of tax being withheld, and they're also looking at superannuation not being paid. So the ATO will have a better idea and be able to wield a bigger stick towards those businesses that aren't compliant. They are going to get nasty about not doing lodgements on time. They are going to get very nasty about not paying obligations on time. So the cardinal rule of ATO compliance, it pays to lodge on time even if you can't pay on time. So get your returns done, get your BAS's, income activity statements, tax returns. I'm going to trip over my bloody shoes in a minute. Penalties, again, same thing. Don't do the form, cop the penalty. Failing to lodge a return or statement on time, failing to withhold amounts as required, failure to other tax obligations, so you think of one and that'll be the other tax obligations. Penalties around superannuation, and again penalties around directors. So the concept of having the veil of incorporation can be pierced by a director's penalty notice. Until you fix up those penalty notices, you're in a world of trouble, world of hurt. So in closing, stay on top of some dollar saving ideas. So you can see some of this stuff didn't get cut out, don't you? Anyone that was here for the last one? Ensure you stay compliant, know your business, set goals, objectives, start turning ideas into reality, and implement a few suggestions from tonight, tomorrow. So apart from Deb, I think everyone's seen that slide from last time. So, all right, so let's have a leg stretch. Do you want to?